Hi guys, welcome all. Let's understand today in this video. You're going to learn about the difference between cash and futures. Okay, it's a very important. Do not miss this video. Watch till the end also. Okay, and very important thing is the risk involved also is very important in futures and cash. Okay, so many of you are thinking that futures and options or futures and equity, what is exactly the difference? And you think that futures is a highly risky. Yes, it is a risky in case if you do not understand about the leverage. Okay, so basic important things I want to show you today. What exactly the difference is here in cash and futures. You all know that you want to buy any stock. If you have a 10,000 rupees cash and you want to buy a Asian Paint stock, so you can buy Asian Paint stock. Currently it is trading at 3,114 rupees. So you can buy 3 shares, correct? So you want to buy you want to use a leverage product where you have a higher capital that you want to buy 150 quantity of Asian Paint. Let us take an example here today. Okay, I will show you current market price. Current market price for the Asian Paint is showing currently at 3,114 rupees, correct? So you want to buy a quantity of let us take example 150 quantity you want to buy. So what is the capital required for 150 quantity? So definitely you have to pay full margin when you want to buy it in cash, correct? So I will just show you an example here. So let us take example here, current market price into the quantity which you have to buy, right? So you need approximately 4,67,100 rupees, correct? So hope this is clear for you. So you need to have a margin of higher, correct? So you need to pay a higher margin here. Take an example. I'm just okay. So you need to have 4,67,100. You want to buy 150 quantity of Asian Paint. So this, you know that there are two reasons you want to buy this. Either the fundamental of this particular stock is very good, or you know that the technically it is showing a positive trend. Okay, so these are the options you have, so that you are predicting that the price is going to go up in next few days. Okay, so in cash segment you need this much money to hold this stock for any number of days. If you are a long-term trader, so you have to pay this much money and hold it. The futures and option is only for the people who want to take these positions for short-term or even long-term duration also. But only thing is that the difference in futures I will just explain you in just few minutes. Okay, so take an example. This is what you are getting. So same thing you want to buy it in futures. So what is the current market price in futures? Is let us take example whether it is in June contract. So I'll just show you a contract of the April month. So 3,129 rupees is there in the current market price. Okay, what is the current market price for particular stock is, you can say 3,129. Okay, 3,129. I'll mention here 3,129 is the current market price. What is the lot size of this Asian Paint is 150. So margin required for this is again exactly same, but it is not so. Okay, what exchange is saying is just you pay 90,000 rupees and you can buy this contract. How much? 90,000 rupees you are paying and you are buying this contract. Is it looks interesting, right? So here you are making the use of leverage. Where you can get this data? So very simple. Once it is there in any broker's terminal, it is available. Okay, what is the margin requirement for the future? So let us take an example in Sheikh Khan's portal where you will get, where you are going to get this particular is, you can see here there is a, if you just go down here the market today, click on F&O. So once you click on F&O, you will get this derivative data. Click on derivative info kit. Okay, if you open this derivative info kit, you will get an Excel here. Okay, so once this Excel is opened, you can see here there is lot of options are available. Just click on margin in this. Okay, so I have clicked on margin. So let us take an example here in Asian Paint only. So you can see here Asian Paint is showing here, correct? You can see. So Asian Paint, the lot size is 150. The margin requirement is 89,000 rupees. Yes. So this is the margin requirement. What exchange is saying is just you pay a percentage of 19% you can pay and buy this particular stock for futures. Okay. So hope it is clear for you. Okay. So again next comes the point. See, in equity you can buy only the quantity which you wish to buy and you keep it for any number of days. Okay, you don't have, but you are using here a leverage, correct? So in leverage what happens, there is a contract. So you are entering a contract between the buyer and the seller, correct? So you can see here Asian Paint, there is a contract is showing April month, and there is one more contract is showing May month, and this contract is showing June month contract. Okay, so you can see here there is a difference in the price. Okay, so here Asian Paint current market price is 3,114 rupees. If you want to buy it in cash, you have to pay 3,114 rupees, and full payment you will buy whatever the margin requirement is there, you can buy it. But whereas here in futures the price difference will be very high. So the difference is, you can see the April month 3129, 10 rupees, there is a difference. Sometimes it will be much more also. Okay, so you can see 10 rupees difference is there in this. So you want to think that if you are thinking that in next 3 months the stock is going to go up, so you can buy it in June contract. If you think that the stock is going to go up in next 2 months, then you buy a May contract. So if you want to buy this in next few days or this month end before the expiry, so you can buy a April contract. Hope it is clear for you. There will be a contracts, very important it is. So 1 month contract, 2 month contract, and 3 month contracts will be there. Okay, so once if you whatever the time frame you are imagining that it will go up, so you can enter that particular strike. Okay, so hope it is clear. So, and also I want to understand the technical also. If you want to see in terms of technical basis, you want to predict that the stock is going to go up. So as I shown you already here, let us take an example of Asian Paint only. So Asian Paint, for me on a daily basis trend, what is the stock price? The stock is positive. The super trend shows a positive trend. Yes, and the next is you can see the moving average which I use. Okay, so you can see there is a positive crossover here. Can you see this? The positive crossover in Asian Paint. Okay, and the price is closed above 20 days average, exponential average. So all the three are showing a positive indication. So what I'm going to do is I'm going to buy a future contract. I'm going to buy a future contract by paying just 90,000 rupees. Okay, so let us understand this in detail in next few sessions. Maybe in the next sessions we can discuss more on this, and also the risk involved. Okay, how the risk involved and what you should do it. So in this video I'll just brief you about what is exactly the future is all about. So the contracts, just takeaways from this video is futures and cash segment. So the stocks which you want to execute it by paying 1 lakh or 4 lakh, the amount much margin required. So if you do not want to pay that much capital, but you want to make use of the leverage product, then futures is the best option to execute this. Okay, hope this video is gives you a brief introduction about what exactly the futures is. So in next video we are going to learn much on this. Thank you so much. All the best for your trades on Asian Paint. Let us track this for few days, how the margin calculations, how every day you need to have the settlement. So very important is daily settlement. Okay, futures is always a daily settlement. Profit and loss you have to maintain on a daily basis. Okay, so thank you so much for watching this video. Please do subscribe to my channel and do share this video to your friends also. Thank you so much.